Good morning, everybody, and this is your S&P 500 day trade setups for today. So this week has been pretty much range bound. We are also forming some form of a consolidation triangle here. The level for me this week is, going into the close of the week anyway, is the close of last week, because this is what's offering support. That's 44.60 that we are getting some form of support at the moment. We're also bottom of this channel. Now the big problem I've got with the channel at the moment is we are forming a series of lower highs here, and we'll get to that on the lower time frames now. But this consolidation on the bottom of the channel is very different to every other time. So every other time it's almost been a V reversal, that was a double bottom. But this, until we break the highs here, this is not looking very pretty. It's just tracking the bottom of the moving average. Sorry, bottom of the channel. If we start moving across to the 3 hour, you'll see big up, big down, big up, big down. No real indication of anything. Oscillators all over the place right now. Bottom of the channel is here. Weekly low, the previous weekly low is here, and this one right here. So obviously we can look at the previous week low as well, and that is there, because that would also influence. And you can see how we've been buying off the previous week's low. So for me at the moment, we are starting to track below the 1 hour, sorry, not the 1 hour, the 3 hour 155 EMA. We've got a crossover of the moving averages. We're busy with the final crossover of the moving averages. So yeah, it's sideways. There's no two ways about that. It's definitely sideways. We are in an uptrend. So obviously the buyers are still trying to drive us higher. And you can see we are forming a series of higher lows here, but we're also forming sort of lower highs ever so slightly here. Now, if I start moving down to the hour, this is where it becomes very, very interesting. So first thing first, look at the length of time that we've been tracking below the 155. Okay, and we're looking like we would break through on Thursday. Wednesday, and then it was a big move down, and then another bounce off with another rejection off the 155 here. This after hours trade here is not really exciting me just yet. Granted, we are trying to get above the moving averages here, but you can see red above blue, so we have the 66 above the 33. Blue is 33, and that is bearish. And you can see we are kind of bearish but flat. Oscillator's not offering anything. So there are two things here. First one is it's a range. We're in a well, there's a couple of things. Sorry. Firstly, is the range, and it doesn't matter which way you draw it. You can draw each one of these lines. Both of these levels are a weekly low, so they will be. If we start breaking below it, especially a close below 44.60, close below 44.60 gives us another bearish bar on the weekly. And bear one thing in mind, we've already had a pretty strong bearish bar. Now we've got a little range bar forming. We've got a bit of a crossover and starting to point down on the oscillators as well. Now, yeah, a lot of people are drawing this in on the weekly. And that is a flag. And obviously a target for the flag will be, first target will be down here at 42.41, and the second target of the flag would be at the bottom of the triangle. Now I could extend this triangle pretty much something along those lines there. So that would be the first point of the triangle, and then I can extend this one further down as well. So there's merit for a pretty big move to the downside. So everybody's talking about a 10%, 10 to 20% potential reduction, pullback, but something like that is just going to give us a massive sort of bit of volatility on the higher time frames. Anyway, let's not look at that. That's a macro view. We're not interested in macro views right now. We're pretty much interested in whether we can trade this or not. So for me, I'm set on hands. I'm really not interested in getting involved in this, especially not after what I saw yesterday. So this big move down, big move up, that's just confusion. We are tracking the bottom of the trend line here. So this 44.50 area and 44.44, 44.50, 44.60 area, that is the zone that we need to clear. If we get below that, then I would start looking to see if we have a bit more juice in the moves to the downside. But for me right now, this is not something I want to be involved in. The Dow is looking relatively interesting. The DAX is looking interesting as well. And the S&P, for as long as this stays below the 155 on the hour, then I'm staying away from it. I'm really not interested. Not interested in going short because you probably get taken out with some bit of news, a proper bounce off the bottom here. And the other thing to bear in mind is that if we do start moving above this area at 44.90, then we're heading for 4600. So short and sweet is wait for the range to break one way or another before getting in on it. Hope it helps, and we'll catch up with you next week. Cheers for now.